A very good morning from Khandwala Securities Limited and welcome to Wednesday's trading action at Dalal Street dated March 16th, 2022. This Wednesday morning, the good news is that WTI crude oil prices have tumbled to $97 a barrel, a level not seen in almost 2 weeks on hopes for a diplomatic solution to the Russia-Ukraine war. Also denting sentiments were the reimposition of fresh lockdowns in China that clouded the outlook for demand. Amidst this backdrop, SGX Nifty is seen flaring to 30 points or 1.36% higher, joining the conga line of rebounding stock markets across globe. Meanwhile, helping sentiments are the Ministry of Finance statement that the Indian economy is well prepared to handle any capital outflows caused by external shocks. The Finance Ministry's Department of Economic Affairs said India had adequate foreign exchange reserve to absorb the risk posed by the uncertain geopolitical environment. Amidst this backdrop, here is the preferred trade on Nifty and Bank Nifty. Nifty current market price 16,663. Buy at current market price. Strict stop at 16,271. Target 16,975 and then at 17,101. Aggressive targets at 17,411. Bank Nifty current market price 35,023. Buy at current market price. Strict stop at 33,139. Targets 36,001 and then at 36,555. Aggressive targets at 38,721 zone. Our chart of the day is bullish on SRF, Atul Limited and Tata Motors with an interweek or intermonth perspective. The one stock to buy right now, buy SRF March futures for 0 to 3 days at current market price 2422 for an objective of 2477 and then at 2559. Stop loss 2237. Alert momentum play. Technically speaking, Nifty's biggest supports are placed at 15,527 and then at 16,411 mark. Only below Nifty 16,411, expect waterfall of selling which could take Nifty down to 15,921 mark with intermonth perspective. From a chartist standpoint, the technical landscape will improve considerably only if Nifty closes above 200 DMA at 16,981 mark. The Nifty options data for March series suggests Nifty is likely to be in a trading range of 15,500 to 17,000 zone. Maximum call open interest at 18,000 followed by 17,000 strike price. So the 17,000 mark will be Nifty's crucial resistance zone. Maximum put open interest stands at 16,000 levels followed by 16,500 levels. Call writing was seen at 17,000 and then at 16,800 strike price while there was meaningful put writing at 15,700 and then at 15,500 strike price. Bank Nifty's maximum call open interest at 38,000 strike price while maximum put open interest at 33,000 strike price. The biggest headwind for our stock markets for the day is that the 10-year US Treasury bond yields have moved about 2.15%. So commanding attention will be the Federal Reserve meeting outcome to trickle in later in the evening where a quarter point rate hike is quite likely, which would be the first increase in the Fed funds rate since 2018. The street will spy with one big eye on the Fed's plan on reducing its nearly $9 trillion balance sheet. The street will also monitor any guidance on the interest rate projections, inflation and growth outlook on backdrop of spiking commodity prices amid sanction on Russia and most importantly, as the certainty over the war in Ukraine lingers. Hopefully, the Fed does not cut its economic growth forecast for the US down toward 2%. That's all we have for now. For any queries, do contact us at 022-4076-7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.